There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB on this Monday afternoon. I'm Nadine Blaney, and from all of the team here, we're really happy to have you with us, whether you're watching us live, on demand, or listening to us in podcast form. Here's a look at this session today. Really strong one, up by about 1%. And it was really a solid performing market right through to the close, which is happening now. So that's the CBOE Australia Index. The S&P ASX 200 is at 8,863. As we look past the 4 p.m. mark here in Sydney, we've got US futures firmer. So lots of green on my screen around the region as well, with the KOSPI up by 1.5% and Chinese mainland markets up by about, pretty close to 1%, and the Hang Seng up by 1.8%. And of course, we saw gold surging yet again, vaulting past its previous record high to set a new one. So that helped lift the sector overall. I also thought it was really interesting to watch some of these defense names, sadly, because we have seen this incursion by the Russians into Ukraine. We saw Droneshield, the best performer on the 200, and also EOS. So it was featured on the call today. I know that Henry Jennings from Marcus Today just spoke of it, and it came out just clarifying around the timing of some of the revenue coming through from its orders. It has a $299 million order backlog. It hit a 5-year high, as shares in the company did. And all of this is happening, of course, before we get the RBA's rates decision tomorrow. So no change is expected when it comes to rates. I think that monthly inflation read was sort of the nail in the coffin for any expectations that we would see a cut come through. But it will be really interesting to see what the board has to say. And of course, listen in when the Governor, Michelle Bullock, speaks after the event, and we will bring you that live here, right around this time tomorrow. So let's take a closer look at some of the sectors that helped drive this market higher, and look no further than the banks. Really, if you're talking about market capitalization and market weight, the heavy lifting was really done but the financials. Look at Commonwealth Bank, up by 2.3%. That's even though UBS reiterating its sell rating on the company. Now, also a sector that did lend some pretty healthy support, call it life support for the market, was the CSL. Not the CSL, the healthcare sector, but CSL I think is responsible for most of that, again because of its market weighting. So even though that's not a huge percentage point jump, up by 2.8%, it represents just such a heavy weighting on the market. So just shy of $200 is where CSL ended the day. Also, if we want to look at where some of the pain came through, Santos off marginally, Karoon, Ample, and Beach down by 1% to $1.18. We talked about Santos and Beach Energy on today's episode of The Call as well. And you know what? Woodside was Kai Chen from MPC Markets' preferred pick in the energy space. Tech was also a disappointment today, with WiseTech off by 1%, a bit of shareholders selling on behalf of Richard White, the founder and leader, really. NextDC down by 2.5%. Well, on those pharma tariffs, we did hear from Pro Medicus today, so it is just telling the market that it is exempt from that 100% US pharmaceutical tariffs. UBS, as we mentioned, saying CSL can offset tariff impacts via US manufacturing investing. MinRes has finished the upgrade of the Onslow Iron Haul Road in W8, and as I WA, excuse me. And Richard White, the billionaire executive chairman of WiseTech, has sold a further $68 million worth of stock. That was just last week. Synlait Milk, also in New Zealand, is scaling down operations after reporting an $800,000 net profit after tax over FY25. I caught up with Brad Gordon from Forsyth Bar a little bit earlier today for all of the latest on the New Zealand market. And you can find that online, by the way. He said that he hasn't been this excited to be an investor in New Zealand in quite some time. Can't remember if he said years. I'm pretty sure he said years. You can go back and listen to that interview, and he names some of the companies that are on his high conviction list. And I know we've got a lot of viewers in New Zealand via Samsung TV, so g'day to you. Nice to have you along for the ride. But we here in Australia are obsessing about the RBA's next move, also what that will mean for Forex. And with that in mind, Stephen Dooley is joining us from Canberra. Stephen, welcome. So, look, let's be honest. A lot of roads lead back to the US dollar right now, particularly even if we look at the record heights that gold set today. So what's the latest?
Yeah, thanks for having me on. Great to be here on a positive Monday. So the US dollar, of course, like you said, the core story out in markets at the moment. It was stronger last week. It was stronger the week before. That's the first time we've seen two back-to-back weekly gains for the US dollar since the start of August. So yes, the US dollar has been stronger. It's mainly because markets have started to pare back some of those expectations of where the Fed will go in terms of rate cuts this year. The chart you can see here is the expectation of where the Fed funds rate will be in 2 years' time. You can see that's gone from below 3%, just before that last Fed decision, to around 3.2% now. So the main driver, at least in the short term, of the US dollar has been that expectation that maybe the Fed isn't as keen to cut rates as perhaps we thought they were 2 weeks ago, partly because of what the Federal Reserve Chair Jerome Powell said after the decision and since the decision, but also because the economic data we're getting from the US at the moment isn't necessarily bad enough. It's been quite good, actually, to cause the Fed to need to cut rates. But then, like you said as well, and this is the much more interesting longer-term story, is in the background we're seeing, for example, gold, silver, all moving, gold to record highs, silver just near to record highs, and that's telling us there's something else happening in the currency space. And what we've seen this year is the US dollar hasn't been that responsive to the fundamentals, to what's happening in growth, to what's happening in interest rates. It's been driven a little bit more by what we call that foreign exchange risk premium, and that's a mix of worries about the size of the US budget deficit, worries about potential looming government shutdowns. We've got one building as we speak. Pressures on the independence of the Fed. And so that foreign exchange risk premium, which is weighing on the US dollar, is really that big story that's seen that move higher in gold, silver, and your alternative assets like cryptocurrencies and Bitcoin.
Oh yeah, okay, let's not forget that. Now let's talk the main event tomorrow, correct? Which is the RBA. So when you're thinking about inflation, when you're thinking about a cautious RBA, what are you expecting and what is priced in already?
So the RBA, along with the Federal Reserve, is clearly the two central banks in the world that are least likely to cut rates at the moment. Everywhere else, Europe, Canada, New Zealand, all of our peers have seen rapid cuts this year. The US and Australia not so much. And because in both Australia and the US, not completely convinced that the battle versus inflation has been won. Inflation is more entrenched. Australia historically sees a slower flow through in inflation, but then sticks around for longer. It's partly because of our wage system. It tends to be driven by the wage set, the minimum wage being set once a year, by more long term with union awards, and so as a result, it tends to be a slower pass through. So that's why Australia is clearly different from most of our peers, a lot more cautious in terms of cutting rates. But like you saw in that last chart, and like you mentioned in the introduction, that spike that we saw in monthly inflation, not just in the most recent one in the August reading, but also in the month before, the July reading, is definitely going to ring alarm bells there at the RBA. It's been a big pickup. We've seen it particularly because of some moves around electricity subsidies that are granted by the state governments. But still, with the RBA still not convinced that inflation has completely gone away, that almost guarantees that the RBA is going to be very cautious. And it does throw the expectation for a Cup Day rate cut, which was pretty much baked in as a sure thing. I mean, there are no sure things on Cup Day, but it was pretty baked in as a sure thing. That's not quite as certain now. And so that's probably what we'll be looking for. Any hint from the RBA that they are likely to cut rates in November, but potentially no hint will be forthcoming, and that might be supportive of the Aussie dollar.
All right, so that's big, but it doesn't stop there, does it? We've got some big jobs data due in the US later in the week. So when you think about the US economy, you sort of touched upon the US government shutdown that still could happen. Where does this sort of lead your thinking when it comes to, overall economic strength in the US?
Yes, well, of course, Donald Trump presided over the longest ever government shutdown back in 2018, 2019, went for 35 days. So he's certainly not going to be, unwilling to go through another potentially protracted shutdown. So, it can certainly happen, though. We've got still 2 days in the US for that to be resolved. But away from that, the story this year has just been that the US economy has just kept on keeping on. It doesn't matter seemingly what has been thrown to it. And that chart there, I think, really shows you the story that what markets were thinking the September quarter, the third quarter growth would be in the US. As you can see, as we got into April, May, felt the sting of Liberation Day. Markets pushed down those expectations. Are we going to get a negative read from the US as a result of the impact of tariffs? And you can see since then, we've marched back higher. And apart from that spike a little bit earlier in July, we're pretty much at the highest level that we've been for most of this year. So now markets have completely shaken off some of those concerns and believe that the US can still produce another quarter of around 3% annualized growth, which is, the holy grail for economies, a developed economy, to get 3% growth. That's not necessarily as good as it gets, but that's the bar that you're looking to achieve as in terms of success. So that's the story here at the moment, and that's why we're seeing such strong growth, particularly in US equities. The expectations of where we'd be in Q3 have absolutely been blown away by the reality, and that's why equity markets have bounced back so much. What it hasn't flowed through to, in my space, in FX, is to a stronger US dollar. And again, it's that foreign exchange risk premium, worried about Fed independence, worried about the deficit, worried about shutdowns, that's still weighing on the US dollar. But away from all the noise, I think, again, that's been the theme this year, that away from the, toing and froing, the noise that we get from politics, the US economy has been remarkably resilient and still remarkably strong.
Yeah, I mean, what else can you say? That's just putting the cherry on it. Really great analysis, how it's flowing through to other asset classes beyond currencies. Really appreciate your time today, Stephen.
Thanks for having me on.
Take care. Stephen Dooley there, joining us from Convera. So yes, RBA tomorrow, US jobs later in the week, and plenty more besides. We'll get you across it all. But just back to equities and companies for a moment. Stock of the day was Novonix, NVX. I sat down with David Lane from Ward Minette and Kai Chen from MPC Markets.
In investing in Novonix, you are taking a bit of a leap of faith in their technology and their ability to deliver that. But they do have a lot of fairly powerful partners. They've got Phillips 66 have got an investment in the company and have provided them with some funding. They've also had some funding from the Canadian Natural Resources organisation, and their hopeful delivery of their synthetic graphite is for Panasonic. So there are some fairly powerful partners who are involved in the company.
I mean, it's good that they are coming into production, which means that they're really ready to deliver to the market. But I do feel like it is an important technology because, you know, in our view, over the next decade, robotics and robotics will be massive. And I think, you know, it's going to require a new type of battery technology. So they'll be well positioned in this space. However, again, it's very speculative.
All right, so that was Novonix. So it did perform well today. I'm just going to see what the final figure is, up by close to 13%. Here are the market leaders in the big end of town, though. Droneshield, off the escalation of the situation in Ukraine, yet again, sadly. Austal as well is up by 5%, so you can see that defense thematic very strong with the gold miners as well. I mean, Evolution putting on 5.5%. And Hyperion X, so that again is the defense play. We had an announcement from the company on Friday when it was the stock of the day, up by 4% to $7.98. Now, what did not perform today very well at all? Iluka Resources, off by 4% to $6.33. Boss, the Digico Infrastructure REIT. Hey, as an aside, we spoke with Raymond Chan from Morgans today. Really interesting commentary around the REITs. He was recently at a conference. He gives us a couple names that he really likes in that space. So he likes that they're moving to more of a capital light model, at least some of them. Anyways, I digress. That's online, ausbiz.com.au. Boss Energy and New Hope as well. Now, in the smaller end of the market, Dead Knot Resources, Nova Minerals, Minerals 260, Trig Minerals, you get the idea, all really outperforming. I mean, Dreadnought Resources up by close to 36%. Now, on the other side of things, we've got Vectin Technologies. So that was, actually, we've got an interview with the CEO up online if you'd like to have a listen. Getting hammered today, down by 12%. Lumos Diagnostics, down by 9% to 15 cents per share. And AML 3D. I think we should also mention EOS on the defense thematic. It was, again, one of the best performers, up by about 5%. Now, we've got U.S. pending home sales due tonight. So that'll be really interesting, of course, because we've seen this real rollover in the U.S. housing market. If we see, maybe we could see some signs of light. You never know. Tomorrow, RBA decision. We get the Chinese PMIs for September as well. But I dare say it's Michelle Bullock and team who will pull the focus. And we will be bringing you not just the decision and instant analysis with a great panel, but we will also bring you the media conference followed by the COB. So looking forward to tomorrow already. I mean, if you've missed anything today, we've got some great interviews online. Richard Hemming gave us some stocks that he's trimming and some other emerging companies that he's got on the bench sort of warming up. He's getting 20% in cash ready. What else? Dean Fergie, if you like small caps. He also talked about 3 small caps that might be on the cusp of a turnaround. And oh boy, there's lots on there. So before I get carried away or leave anybody else out, we'll say goodnight. Hope you have a good one, and we'll see you tomorrow. The local market did finish well into positive territory. The S&P ASX 200 up by 0.8%, close to 0.9% at 8,863.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.